All right, guys. So right now we are looking at the NQ chart from December 9th of 2025. We're going to be talking about a very, very simple and easy day trading strategy that I was able to implement on this day to get some very, very big gains. And you could have used this strategy for pretty much anything. You could have used it to pass combines, whether you're on, My Funded Futures or TopStep or Apex or whatever. You could have used it on one of your funded accounts. If you have 50K accounts on any of these websites I just mentioned, or if you even have a personal account, this strategy, works out very, very well. It is able to be implemented in any of these ways, and you can be very, very successful with it. Now, I was able to use this today on a couple of funded accounts on TopStep and on my personal account as well. So today was a very, very nice day, a one and done type day, a day where things got done very, very early. You can't beat that. That is always very perfect. So again, this is what the pre-market looked like on December 9th of 2025. You can see here, we're just kind of trending down and down and down and down, meaning that right now we are at a discount. We are towards, the bottom of the recent range that we are seeing on NQ. We zoom out a little bit. You can see here, it's just even more pronounced that we are just kind of going down and down and down and down and down. We're getting lower and lower and lower and lower and lower. You can see here that with this big kind of downward red line here, we had recently kind of sweeped a big amount of liquidity coming down here. This is from 5:39 a.m. In the morning. So I don't know. We've already kind of broken through the morning lows and stuff. So that's a couple of different key points for why I'm looking for longs now. Not only are we in big discount, and again, when you are longing in discount, that is going to give you a really, really good risk to reward ratio. But also after we've swept, a pretty important low already, that's another reason why I'm looking for longs. And lately, I've been doing a lot of back testing, doing a lot of, experimentation with inverse fair value gaps, and it's been working out very, very well. And that's exactly what was able to happen today. So again, right now we are at the 929 candle right before the New York Open on December 9th. And we're going to fast forward one candle here, and we're going to show what that open looks like. And we get a little bit of movement. Again, not really anything too crazy happens. We kind of run up a little bit, but then we come back down. I don't want us to run up too much or too fast. Again, I'm looking for longs, but so I do think the market is going to be going up from here, or, at least I'm looking for plays that are going to tell me the market is going up from here. I don't want to force anything. I'm being patient, but we don't want the market to go up too fast, too soon, because if it just runs straight up, if we go 100, 200, whatever points straight up with no kind of entry model or no way to get in, then we're going to miss out on that as well. So I'm fine if the market stays down for a little bit. I want it to, set up some kind of entry here. We fast forward to 932, and again, we get more downward movement here. We get some really, really long wicks. There's some really nice volatility so far in the markets. And then we get to 933, and this is where it starts to set up. This is exactly what I'm looking for. Again, here we form a very, very nice fair value gap. And this is what I'm looking for, because again, if I want to go long and if I'm using the inverse fair value gap strategy, I'm going to need that fair value gap to form. And then we're going to be playing off that. And this actually sets up perfect. So if we do end up, inversing this fair value gap right here, this could be a very, very nice one to take, because again, we're in discount right now. So longs are in play, and we already swept those morning lows. So we swept a major zone of liquidity, and we have, a nice discount with some room to run up to the top, hopefully. And again, if we zoom out here, there's a lot of different places that we could target. We can, target maybe some liquidity around here. We can target some liquidity around here. We could go up here. We could go all the way up to these morning highs, of like 5:30 a.m. We have lots of different options for where we could be potentially taking some profit or whatever. But again, first, we're going to need this fair value gap to actually inverse. We're going to need the setup, but we're just kind of getting ready. We're mentally preparing for what our trade's going to look like. Again, you always want to have a plan. You always want to know, what your different potential ideas are. You want to know how you're getting in, how you're getting out, all of that good stuff. So we finally got the fair value gap. This is a very, very nice fair value gap that formed. Again, this is a pretty big one. It's not one of these like single pixel fair value gaps that, might not even exist unless you zoom in super far or whatever. This is a nice looking fair value gap that we did form right here. So I think this is one that would definitely be in play, especially if we rip through it and break through it pretty quickly. Our next candle here, this is the 933. We kind of go inside the fair value gap. We're kind of bouncing around. Not really anything too crazy yet, but it's not invalidated or anything like that. Here we do kind of sweep up through this fair value gap that we did form. So that, has me worried a little bit. Again, I don't necessarily love to see that. We'd like to just break through it, hold above it, and then kind of keep going. But that's not what happened, but I still think it's in play. It's still okay. This is still something I'm willing to take. And then finally we get it. Again, with this 935 candle, we kind of smash through this fair value gap. We hold above it, and now this trade is in play. And now this is a trade that I'm definitely going to be looking to take. So let's set this up and see what's actually going on. And this is actually where I decided to get in right here. So let me move this over a little bit. I'm trying to like show it without spoiling too much, without showing the future candles. So here's where we get in. Again, our stop loss is going to be at the bottom of this candle that actually formed the fair value gap. I'm going to be putting it all the way down to the wick. And then again, we're going to have to choose where we want our take profit to actually be forming. Now, again, we could simply just go up to the 930 open, and this would not be a bad trade, I don't think. Again, you can put your stop loss all the way down to the wick. You can put your take profit all the way up to the 930 open kind of candle that formed the wick up at the top. And this, you can see here, this is going to give you a 1.03 risk reward ratio. So this is certainly not bad. This would be a fine trade, a 1 risk reward trade that I would say has pretty high likelihood. Again, we're down in discount. We're going to a long. We're targeting a major area of liquidity. Like, it kind of checks all the boxes. It's totally fine. But if you have your sights set on bigger and better stuff, there are definitely some bigger options here. Again, you have tons of areas of liquidity up here where we just kind of went lower and lower and lower, and these are all in play. And again, if you wanted to go all the way out to the 530 highs that we saw, I think that would even be in play. It would be even reasonable. And if we go all the way up to there, then we are looking at a 2.45 risk reward ratio, which is certainly not anything insane. But again, I don't know. I ended up, I think, targeting somewhere around here, somewhere around these like 8 a.m. Kind of areas that we got, and I went for right around a 2.0 risk reward ratio. And again, it's just going to be depending on what your goals are, what your account size is, what you're willing to risk and stuff like that. When I'm trading my evals, obviously you don't need something big like this, because I'm going to be going with max contracts on my evals a lot. If I'm doing a Top Step eval, I'm going 5 contracts. If I'm doing an Apex eval, I'm doing 10 contracts. So I don't need to move this big. But if I'm in like my personal account, or if in my combines or whatever, I'm just trading one single NQ contract, and we can go for something a little bit bigger, something a little bit more drastic like this. So if we set this up with one NQ contract and we're going for a buy, we're going to be setting our stop loss down here. Again, that's going to be about a $750 loss, which I think is reasonable. It's fine. Some people would say that's too much. Some people say it's too aggressive, whatever. And if you believe that, that's fine. You can go down to, 5 MNQs or less, or maybe you want 7 MNQs or whatever. But if I'm doing one NQ, we're going for about a $750 risk here, which again, I think is okay. And if we're targeting this area that I set up here, that's going to get us at about $1450 in terms of the potential profit. Again, if you wanted to go for, the 930 open candle, you can have about $775 in profit, whatever you wanted to go for. But I ended up targeting up here, which again is going to be right around 1450-ish. And then we can finally see how this trade is going to play out. Again, here's what we kind of bracketed out. We're entering as soon as we close above this fair value gap. We inverse this fair value gap that we did form at like 932 or whatever. And then you can see here how this trade is going to play out. We go down a little bit, dip into the fair value gap, but then we start exploding up. And then already by 939, we have, broken this area. If you were going for the 930 open highs, we've already broken that at 939. You had a full profit trade. That's awesome. But then we start going down. We start kind of getting crazy. It starts, kind of chopping around and stuff. So if you were aiming for higher highs like me, you're maybe a little bit worried right now. This kind of chopped around for a while, but then eventually you can see it does run up, and it almost gets those levels that we were at before. But again, depending on where your goals were, if you had your goals around 830, you're maybe out of this trade now. If you had your goals around the 819, you're maybe out of this trade now. But then again, eventually you can see here on the charts that we would hit our full kind of take profit right around here. Finally at 1043, we would hit our full take profit and get around 1450. Now again, I had this on 5 Top Step accounts, so 1450, that's going to get us times 5. I don't know I can't remember what the exact number was. It didn't end up being exactly 1450. It was like 1445 or whatever. But that's going to get us around $7,200 in profit, $7,250, somewhere in that area. A very, very nice trade, a very, very nice day. And again, I'm all the way done by 1043. My trade closes. I'm done for the day. That's a very, very nice day. Quick and easy. A little bit over an hour. $7,200 of profit, over $7,200 of profit on my Top Step accounts. Again, I also took this on a personal account. So this is a very, very good day overall, getting close to around $10,000 in profit between a personal, some Top Step accounts, all that good stuff. But like I said, this trade would have been totally fine to, take on any of these websites, any of these funded accounts, any of these evals, any personal accounts, whatever. Simple and easy strategy. Again, we were in discount. We swept the lows. We formed that fair value gap. We inversed it. We took it long. And hey, it was money. This was a very, very nice day. It worked out great. But that's pretty much it for this video today, guys. Hopefully catch you in the next one. Until then, peace.